Let's get more on this now with Tim Waterer. He's a business and trade analyst and joins us from Sydney. Welcome back to the programme, Tim. Now, Takeichi has a super majority to slash taxes. Does this guarantee a continued rally, or could the yen take a hit?
Nice to be with you again. Well, markets, they did like the outcome. A decisive victory is what investors were looking for, particularly when it's from a pro-growth candidate. So traders of stocks, they're liking what they're hearing in terms of the growth outlook based on that stimulus program. So I think, yeah, certainly in the short term to medium term, things looking fairly bright for the Nikkei, courtesy of some of those fiscal stimulus tailwinds that could occur. Now, the yen's a little bit of a different story. It was initially weaker on the election results, but there is, I guess, a concerted effort by Japanese and US officials not to see the yen go to extremes in terms of weakness. So we saw a little bit of a correction there in terms of the yen decline today. That 160 level dollar-yen rate, that's a bit of an unofficial line in the sand. The other thing to keep an eye on is what's happening to Japanese yields. They pushed higher, and that's on expectations that yields will need to rise to get investors to absorb a lot of the debt, which could come as a result of these fiscal stimulus programs. So lots going on in the markets courtesy of the Japanese elections, but generally a good outcome for risk assets.
Right, and there's a number of data due out this week. Could a weaker jobs report lead the Fed to cut rates as early as March?
It would have to be a particularly weak report, I think. So the market's expecting somewhere between, say, 50,000 to 70,000 jobs to have been created in January. I think jobs numbers will really have to fall off a cliff and maybe go into negative numbers to bring forward that timeline of interest rate cuts. So I think as things stand right now, we're still looking at a mid-year timeline for the next rate cut from the Fed. So like I said, a lot depend on what we see in the jobs numbers, but they'd really have to turn pear-shaped in a hurry, I think, to change that timeline.
Right, and as we just mentioned, China's central bank has been buying gold 15 straight months now. Is this simply diversification or a strategic move to sanction-proof its economy?
Both. I think there's certainly a geopolitical desire to get some separation away from the dollar and less dependence on it. So not just China, other central banks as well, really looking to bolster their gold reserves to protect against the US dollar potentially being used as a financial weapon against them. So I think a number of central banks, including China, they'll be looking at these current discounted gold levels and seeing it as perhaps a nice opportunity to add to their reserves with these gold prices hovering on or around the $5,000 mark at the moment.
Right, we'll leave it there for now. Tim Waterer in Sydney, thank you very much as always.